Welcome back to my channel once again. Welcome back once again to my channel. I'm so happy to welcome you once again to my channel. So in today's video, I'm going to be sharing with you a simple trend following strategy. In this strategy, we are going to focus on trend following. Remember that they say trend is your friend, and it is absolutely true. Trend is your friend. So if you want to cash more pips, follow the trend. Remember that the more pips you cash, the more money you make. So many people are losing money. Why are they losing money? Because they are trading against the trend. And if you want to be cashing out from the money of those that are losing, you have to trade in the direction of the trend. That is why in all my videos, I always advise you to trade in the direction of the trend. But this video today is going to focus on trend following. Are you a newbie forex trader that is looking for a strategy that will be fetching you money consistently in the forex market? Then I have good news for you. You have to trade in the direction of the trend, right? If you check and see the most richest forex traders in the world, they are trend followers. Even the big banks, the big smart money, they are trend followers. So imagine if you are following the trend. Imagine the kind of pips that you will be making, the kind of money that you will be accumulating, right? So if you truly want to master trend following, then this video is for you. Watch the video from the beginning to the end and you will understand the power of trend following. My name is Austin Ikeru and you all are welcome to my channel, Ostino FS. I'm a professional forex trader. I've been in this business for the past 8 years, and in this channel I talk about forex trading and I give you various strategies to be profitable in the forex market. So back to business. So when we talk about trend following, we are talking about trading in the direction of the trend. And so for you to trade profitably, there are just two things that you need as a trend follower. The first thing you need is a trend line, and the second thing you need is a moving average. Then the third thing you need should be a momentum, right? You need a trend line, you need a moving average, and you need to understand momentum. So if you have these three things together with you, then you are ready for business. So it depends on the direction of the trend. Like I said, before you start trading, you need to look at the market structure. So if you are a trend follower, it is not advisable for you to stick to only one pair, right? Because sometimes some pair might be ranging. So if you truly want to focus your trading strategy as a trend follower, then you need to trade so many pairs. Trading so many pairs doesn't mean that you should trade it at once. No. What I mean is that you should look at for pairs that are trading, right? Remember that some pairs may be ranging while some may be trending. So as a trend follower, your job is to catch trend. Your job is to do what? To catch trend and follow the trend. That is the only way you make money, right? So if you focus on only one pair, you might not be able to catch a reasonable trend. So that is why as a trend follower, you must go through several pairs to pick the one that is trending at that moment for you to be able to catch a trend, right? So now for you to be able to trade this strategy profitably, you need two things. Like I said, you need a trend line and you also need a moving average. So in this video, we are going to combine the moving average and the trend line. So what we are using is going to be the 20 exponential moving average and the trend line. So we are trading in the direction of the trend, right? So the first thing you need to do is to look at the direction of the trend. Is it an uptrend or is it a downtrend, right? So you have to scale through all the pairs. You can go to gold, Euro USD, GBP USD, GBP JPY, or even go to commodities, right? Search for pair that is currently trending. So how do you identify a trending pair? You identify a trending pair based on the action of the candlesticks, right? So if the candlestick is making higher high and higher low, higher high and higher low, it means that the market is clearly in an uptrend. But if the candlestick is making lower high and lower low, lower high and lower low, it means the market is clearly in a downtrend. But if the price has been above the moving average for a very long time, it means the price is clearly in a strong uptrend. But if the price is below the 20 exponential moving average for a very long time, it means the market has been in a strong down move, right? So these are the things you need to understand for you to know the directional movement of the market. So once you have identified the directional movement of the market, you simply trade in the direction of that market, right? Because that is where you are going to make enough money. Remember that when a market is trending either up or down, right, you don't trade against it, right? Because if you are looking for, maybe the market is trending up and you're looking for a resistance level to trade against the trend, you're going to get hurt. Because once an uptrend develops, it is going to break so many resistance level. And when a downtrend develops, it is going to break so many support level. You don't know how many support level or how many resistance level that this trend can break before it will eventually reverse, right? Let's assume a market is clearly in an uptrend, right? And instead of you trading in the direction of the trend, you start looking for maybe a resistance level for you to trade against the trend, right? Luckily, you got a resistance level and you place a sell trade, and what happened? The market broke above that resistance level and hit your stop loss, right? Then instead of you to trade in the direction of the trend, you are still looking for another resistance level, right? And you spot another resistance level and you still place a sell trade. What happened? The market broke above that same resistance level again. What happened? You have lost 2 times, right? Instead of trading in the direction of the trend, you still insist that you want to trade against the trend, and you still search for another resistance level and you trade that resistance level. What happened? The market will still break above that resistance level, and that is how the market will be hitting your stop loss consistently until you become angry and you become sad, and then before you know it, you start revenge trading. Before you know it, will just blow your account. Why? The ones that are following trend will just relax, right? Do you know what it means? That you just place a trade and then you relax and money will just be flowing, right? That is the power of trend following. You place a trade, no stress, no emotional stress, no psychological stress. You just place a trade and then relax your mind. Once you pick the direct sniper entry and place your trade, you relax and watch the trade go in your direction, because the market is clearly in a trend and you know the direction of that trend, right? It's very important. So in this video, I'm going to show you some examples on how you can trade using a trend line and a moving average as a trend follower. So let me give you an example of what I am talking about so that you understand what I'm talking about. Now look at this picture clearly. You see that the directional movement of this market is up, though this is not a strong uptrend, right? This is a weak uptrend, right? Because the pullback is deep. So with this type of trend, you can simply use a trend line, right? Because a moving average cannot work well in this type of trend. The only moving average that can work well in this type of trend is the 200 exponential moving average and not the 20, right? So since the trend is moving slowly but clearly in an uptrend, we can just use the trend line and only trade in the direction of the trend, right? You look for a trend line, connect the lows just like this, and you trade strictly in the direction of the trend, right? But this is clearly a slow trend, right? It's a slow trend. If you watch that, the price went all the way to this level and then came back to test the trend line, right? So this one is a slow trend, right? You can only use the trend line in this one. Let me give you another example, right? You understand what I'm talking about. Now this is another example, right? This is another example of trend line strategy. you can clearly see that the market is in an uptrend, right? The market is clearly in an uptrend. So you are looking at the lows, right? Like I say, in an uptrend, the market makes higher high and higher low. So you are looking at the lows for you to place a trade. So these are the lows, these are the lows, these are the lows, and these are the lows, right? So the earlier you catch a trend, the better for you, because the earlier you catch a trend, you are going to ride massive trend, right? So the person that caught this move here will make more money than the person that caught this move, right? And the person that caught this move will make more money than the person that caught this move, because the higher the trend goes, the higher probability of it reversing. Remember that the market cannot go too much, right? The market cannot go be in an uptrend forever, right? There's a level that the market will get to, and it will reverse trend, and the trend will change direction. So it is always advisable that you watch out for trending market so that you trade in the direction of the trend. Now this is another example. This is clearly a downtrend, and you can see that the market is clearly moving down. And in a downtrend, you are only meant to trade at the resistance level, right? Because in the downtrend, the market is making lower high and lower low, right? So you use a trend line to connect the highs of the market in a downtrend. So what do? You wait for the price to make a retracement to the highs, right, to the trend line for you to place your sell trade. So once the price comes to the trend line, you simply place your sell trade, and your stop loss will be above it. You see that the market will collapse lower, right? If the market comes again to the trend line, you place your sell trade, and your stop loss will be above it, and the market goes down, right? So where do you close your trade? You close your trade when the market breaks above the trend line. Like here, the market has broken above the trend line, so this is where you are expected to take your profit. So that is why I say the earlier you catch a trend, the better for you, because the person that caught this trend will make more money compared to the person that caught this trend, right? So if you caught this pullback, right, you are going to make more money compared to the person that caught this pullback. So the earlier you catch a trend, the better for you, right? So it is always advisable that you look out for trend. So look at another example again. This market is clearly in an uptrend, right? Because it's making higher high and higher low, higher high and higher low, right? So where do you place your trade? You place your trade at the lows because it is clearly in an uptrend. So you do what? You plot out your trend line and connect the lows, right? Connect the lows, right? You can connect just two lows and extend it to the future. So when price makes a pullback to the trend line, you simply place your trade, right? You can see that the market went up, then came down here and makes a pullback to the trend line. You place your buy trade here, right? The market goes up again, comes down here and makes a pullback to the trend line. Tested it, so other people can still place their buy trade here. The market goes up a little, tested it again before it went up again. So this becomes an area of value. This trend line becomes an area of value where buyers are looking to place their trade. So you can clearly see that this is a stress-free trading strategy. You simply identify a trade and then you trade in the direction of that trend. So where could be your entry? At the support level, right? The support level should be your entry. And what will act as a support level? The trend line. The trend line will clearly act as a support level, right? So that is why it is always advisable for you to trade in the direction of the trend. Now look at another example again. You can clearly see that the market is clearly in an uptrend, right? You can see that the market is clearly in an uptrend, making higher high and higher low, higher high and higher low. So if you open a chart and you identify this type of market, right, just know that the market is clearly in an uptrend. So your job is to trade in the direction of the uptrend. So you look at the lows. That is where you expect to place your buy trade, at the lows, right? So once the price makes a pullback to the trend line, you place your buy trade. And the price makes a pullback to the trend line, you place your buy trade. And remember, the earlier you enter a trend, the better for you, because you cannot compare someone that entered earlier to someone that entered late, right? Someone that entered here entered earlier, right? Because if you enter here, you place a buy trade here, you are going to cash all this move. All this move, you're going to cash it, right? You're going to cash all this move without any stress, right? So you can't compare the person that plays a buy trade here with the person that plays a buy trade here. So the person that plays a buy trade here is going to make more money compared to the person that plays a buy trade here. So the earlier you cash a trend, the better for you. Some traders are so scared that they will identify a trend, but they are scared of trading. They're just scared that maybe For instance, now they identify that this is clearly an uptrend, and when the trend makes a pullback here, they'll become scared, they'll become afraid. Instead of to place a buy trade, they'll become scared. What if I place this and this thing goes against me? What will I do? They become scared, and before you know it, they'll be looking at the trend, and the market will just go up to this level and then comes back the second time to test the trend line. They will still be scared, right? The market will go up again. Maybe this is where they will finally decide to place their buy trade when the market has moved so many pips, right? So the person that placed his or her trade here will make more money compared to the person that placed his or her trade here, because the higher the trend goes, the higher probability of it reversing, because the trend cannot travel forever. It gets to a point and it will reverse. So that is why it is always advisable you trade in the direction of the trend. So let me give you an example, a live example. So this is Euro USD, and we are looking at the 15-minute time frame as a day trader. So if you really want to catch a trending move in a day, like you're a day trader, right? You want to catch a trend in a day, you can simply use the 15-minute time frame, right? Because with a 15-minute time frame, you can catch a strong move in a day. Not only a day, even in a week, because there is a trend that can persist in a week, right? But with 15-minute time frame, you can get a better sniper entry. So right now we are at Euro USD 15-minute time frame. So if you watch clearly, you see that the market is in an uptrend, right? The market is in an uptrend, right? Making higher high and higher low. So if you really want to catch this move, the first thing you have to do is to plot your 20 exponential moving average, right? Now you have plotted your 20 exponential moving average. In my previous video, I showed you how you can easily plot your exponential moving average. You go to the indicator, right? Click it, you type the moving average exponential. One is open, you set it to 20 EMA, 20 exponential moving average, and then you can change the color to any color you want. I prefer black, right? Because this is a white background, so you can use any color you want, or any color you like. So we have already plotted the moving average, the 20 exponential moving average. So you can clearly see that the price is respecting the 20 exponential moving average. So whenever price comes to the 20 exponential moving average, it tends to go up. When the price comes to the 20 exponential moving average, it tends to go up, right? So now we have the 20 exponential moving average. We also need another confirmation for us to confirm our trend following strategy, and that is the trend line. So you simply connect the trend line to all the lows, right? To all the lows, right? So you connect the trend line. So the trend line will give you the confidence that the market is clearly in an uptrend. If the market is unable to break below the trend line, it gives you a confidence that the market is clearly in an uptrend. So if you watch clearly, you will see that the market is clearly in a strong up move, right? The market is clearly in a strong up move, right? Because since the market broke above the moving average, since the market crossed above this moving average, right, the market has been in a strong up move. And that is why the price has been respecting the 20 EMA. If you watch, you see that the price is still far away from the trend line, telling you that this is clearly a strong up move. So in this scenario, you should be looking at the 20 EMA, because if you're waiting for the price to make a pullback to the trend line, you will wait and you get tired of waiting. And when the price will eventually make a pullback to the trend line, maybe that is when the trend is about to end, right? So in this scenario, you look at the distance between the price and the trend line. So if the price is far away from the trend line, then you make use of the moving average, right? But if the price is crossing the moving average back and forth, like it crossed the moving average, goes up, cross, 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 you simply look at the trend line, because when the price makes a pullback, it will definitely reverse from the trend line, comes back again, reverse to the trend line. So that is when you should be looking at the trend line. So the essence of drawing this trend line is to make sure that you are trading in the direction of the trend, because the trend line will help you to identify the direction of the trend. So for the fact that you have plotted your trend line and the price is respecting the 20 EMA, this tells you that the market is clearly in a strong up move. So you trade in the direction of the trend. So this is the simplest trend following strategy that anyone can master. Honestly speaking, if you can master this trend following strategy, you will make so much money in the forex market. And like I say, this strategy can be used in any pair, currency pair, future, commodities, indices, crypto. You can use this strategy in any of them. And like I said, as a trend follower, don't ever stick to only one pair, right? Because if you stick to only one pair, you might not be able to catch trends, because the pair that you are sitting on might be in a ranging market for a long time and you will not be able to catch a trending market. So what you do is you search for trending market, go through the pairs, right? There are so many pairs out there: Euro USD, GBP USD, gold, silver, platinum. There are so many pairs that you can search for. Look for the one that is currently trending. And I've told you the scenario of a trending market. Once it's making higher high and higher low, it's clearly in an uptrend, and once it's making lower high and lower low, it is clearly in a downtrend. So search for a pair that is trending and tread in the direction of the trend using the 20 exponential moving average and a trend line. So ladies and gentlemen, that is all I have for you on today's video. I want to tell you that I'm back. Before I was so busy, that is why I schedule my uploads every Saturday, but right now I think I'm done with my project and it's not much it's not too much again for me. So this time around we're going to be updating you guys back to back as usual, so prepare for updates back to back. I'm going to be sharing you updates every day, right? It's not going to be every day. Like whenever I'm less busy, I will definitely share an update with you. So make sure you are subscribed to this channel, turn on the notification icon to be notified whenever I upload new content. I will see you again in my next update. Bye.